Another element to consider of how narrow the market is, these big cap tech stocks have done quite well in a period where the Federal Reserve still is net relative to other bull markets. The last past half dozen bull markets, the Fed is still tight. And the Fed has recently said that if it wasn't for the fear of tariff induced inflation, that they would be cutting rates by now. And I think this feeds into how narrow the market is. If you consider a textbook example of the Meg 7, all these companies, if it's cloud computing, if it's GPUs, if it's AI, this new technology is being driven outside of the classical realms of the business cycle. It's a business cycle onto themselves, and these companies they generate a lot of cash. They have the willingness and the ability to spend a bunch on R&D and CapEx, and they don't necessarily need the Fed on their side. And so I think there's a good reason why these big cap tech stocks have rallied, and some of them have rallied back to valuations, which might be a little bit less appealing than they were just a few months ago. But as that pertains to the rest of the market, I think another reason why the other side of this is the reason why a lot of sectors haven't performed well is that the Fed is still rather tight in what one might consider the early innings of a new bull market or the continuation of a bull market that started a couple of years ago. And so again, it's an opportunity set for us, and we think about the portfolio as a whole. At market lows recently, the valuation of our portfolio not only was a nice discount from the Russell 1000 growth, maybe two or three multiple turns, maybe a little bit more, but interestingly enough, the valuation on 12-month forward earnings was on parity with the S&P 500. And then on the growth side, relative to the S&P 500, we have significant more future growth, the expectation of future growth, and significantly more profitability. And so that's a good setup against the S&P 500 versus the Russell 1000 growth. We're not suffering from growth or profitability, and we're at a pretty significant discount on the valuation side. So the net result of this recent downturn, while we've been able to pick up some individual stock opportunity, and we continue to find some on the individual stock side, our overall portfolio hasn't been this cheap in quite a while, certainly a lot cheaper than it was at the market highs at the end of last year.